but it's great to have you all here, and welcome again. On the dais today, we have Vinita Gupta, our CEO, Nilesh Gupta, our Managing Director, and Ramesh, our Global CFO. I'm Ravi Agrawal, Head of Investor Relations at Lupin. We have a small AV which we will run for you, and then we will get into a presentation, and then after that we'll follow it up with Q&A. Over to you for running the AV to start the meet.
Not very clear.
No.
Everyone has the right to a healthier tomorrow. Access to the medicines they need and the quality care they deserve. At Lupin, we're pioneering that brighter future today by putting science into action. It's a commitment to having the best people, creating the best treatments, the best way. It's ensuring those treatments reach millions of families. And it's delivering relief to those who need it most. It's a better, healthier tomorrow, powered by people who care. We are Lupin. We catalyze treatments that transform hope into healing.
Yeah. Can we just we start the presentation now? If you could just roll over to the second slide, please, with the safe harbor statement. Yeah. One slide after this. The next slide, please. Yeah. Before we start, I think the safe harbor statement, information provided during this presentation may contain forward-looking statements. These statements are based on current expectations, forecasts, and assumptions that are subject to risks and uncertainties which could cause actual outcomes and results to differ materially from those statements. The company disclaims any obligation or undertaking to release publicly any updates or revisions to any forward-looking statements, whether as a result of new information, future events, or otherwise, unless required by applicable law. I now request Vinita to, if come and just start the presentation for us, please.
Could I go from here?
Thank you, Ravi. If you can hear me, I'm likely going to do it from here because the acoustics there seem okay to me. Yeah? Great. Well, it's a real pleasure to meet all of you here today in person. I know we haven't done a face-to-face meeting for a good number of years. The last time I recall we met, it was, I think, in 2022, when, thank you, when we were just coming out of COVID, had gone through a number of challenges that had impacted our performance. And from there, in 2022, with the efforts that we worked upon, I think about it, number one, execution of new product launches, in particular in the US, to turn around the US business, leveraging our complex generic portfolio to build other developed markets, growing India and other emerging markets on a consistent basis. At the same time, focus on cost optimization, whether it's footprint rationalization or broad efficiency measures. And third, our quality and compliance efforts that enabled us to work through our OAI sites, 3 sites in particular, have really enabled us to turn our business around over the last 3 years. We're very pleased that fiscal year 25 has been a stellar year for the organization, where we have continued the momentum, the growth momentum, as well as continued to evolve our strategic growth drivers and capabilities to continue to grow in the future. So we look forward to sharing with you our performance this far and our plans going forward. So before that, I'll just start with where Lupin is today. When you look at our company globally, we are the 12th largest generic company by revenues. Had a great year with $2.7 billion in revenue and $625 million in EBITDA. delivered by a very strong group of Lupinites. When you look at our presence across our key markets, we have a leadership position in all our key markets. Starting with the US, where we are the third largest company by prescriptions dispensed. India, where we're the 8th largest, primarily organically. I mean, there are companies that have done acquisitions that have gone above us, but from an organic growth standpoint, we've consistently grown our India business. And other markets like Australia, where we're the 4th largest company on the generic front, and South Africa, we're the 8th largest company on the generic front. So really a substantial position in all our critical markets, driven by a very strong pipeline of generics, branded drugs, as well as complex generics. If you look at our business globally, for this past year, it's very well diversified. You look at the developed markets and the emerging markets, the US and other developed markets are roughly 50%, India and other emerging markets are roughly 50%. And when you look at the nature of the business, the India and emerging market is primarily branded business. US, other developed market is primarily generic business. So very well diversified business geographically. Very pleased with the progress we have made on the ESG front. So it's been a stellar year for us, not only from a financial perspective, building on the growth momentum, but also growing sustainably as an organization. So this is our current footprint around the world. In particular, on the manufacturing front, we have a very strong footprint that supports our generic business globally, with 15 manufacturing sites around the world, 4 in the Americas, 2 in the US in particular, that give us tremendous capability and flexibility to be able to manufacture more in the US if it made sense, if, based on the tariff considerations and also the economic incentives that the government puts in place. If it's attractive, we will have the flexibility to manufacture more in the US. You look at our R&D centers, 7 R&D centers around the world, including 4 in the Americas again, and 2 in the US, as well as in Mexico and Brazil. And then 1 in the Netherlands, the Nanomi long-acting injectable R&D center in Nanomi. So tremendous capabilities on the R&D and manufacturing front to drive our growth going forward, have certainly contributed significantly to our growth so far as an organization. You look at our manufacturing plants, in particular for the US, we have 12 plants that serve the US market. I'd say 11 right now because the Pune biotech facility is yet to be approved by the FDA, but have multiple manufacturing sites that are approved by the FDA, as well as other regulators that enable us to build a generic business. So if you look at our major pillars of growth, first our purpose. You saw our purpose statement that we take a lot of pride in. We put a lot of effort in crystallizing that statement and are very proud of catalyzing treatments both across innovative medicines as well as affordable medicines to serve the communities and the patients that we provide drugs to. When you look at our major pillars of our business, the US in particular has come a long way for the organization, evolving our portfolio from the simple products to complex generics, in particular on the inhalation front, very soon on the injectable front as well. Fiscal year 26 is going to be a material year on the injectables front, and biosimilars, which is an opportunity that is emerging now for us. There's been a lot of back and forth on the biosimilars front over the last couple of years, but given the change from a regulatory perspective, the FDA reducing the requirements for interchangeability studies, as well as the private label model appearing in the US is emerging as an attractive biosimilars market, of course with selective portfolio choices. We also continue to operate our legacy business of oral solids, ophthalmic, dermatology, and leverage product opportunities that differentiate us, like you've seen Mirabegron, Tolvaptan, that is going to be a material contributor in fiscal year 26. So the US is on a very strong foundation, a very strong trajectory from a growth perspective in the next couple of years. Other developed markets, especially Europe, Canada, Australia, leveraging our portfolio in the US, the platforms in the US, complex generics are the largest part of growth in our other developed markets and allow us to really, build both on our capacities, manufacturing, as well as R&D capabilities to gain operating leverage across the globe. In India, we continue to focus on delivering growth above the market. The last 5 years, the last 10 years, we've consistently grown above the market. We'd like to grow 1.2, 1.3 times the market, and we have done that in many years. The last couple of years with the loss of exclusivity in licensed products, the growth has been a little below that, but it's still been above market growth over the last many years. And our strategy is both innovative products as well as a pipeline that we have built internally, as well as licensed through partners, as well as acquisitions. You saw recently we acquired the insulin brand from Lilly, which enables us to really gain the end-to-end economics on the product. And we'll continue to look at acquisition opportunities to bolster our portfolio in the India business. Simultaneously, we also are expanding our footprint. We have done pretty well in terms of sales force expansion over the last couple of years and continue to focus on expanding our footprint as a business within India. Also, you've seen us getting into strategic adjacencies that enable us to go beyond the pill, beyond the prescription medicine, into diagnostics, digital, OTC products that enable us to bring a full solution to the patient as opposed to just the prescription. We are starting to see the benefits of this strategy. We are starting to see the impact of the strategy on our prescription business, and we'll continue to evolve these areas to be able to both strategically contribute to our position in the marketplace as well as build value through these efforts. Other emerging markets, in particular South Africa, Brazil, Mexico, Philippines, we have strong local businesses that are pretty self-sustaining. All of them tend to really run the business on a positive cash flow, on growing profitably, primarily through their own pipeline developed internally or in licensed, but also where possible integrate with Lupin's pipeline, in particular in the key areas like respiratory, CNS, biologics as well. In the emerging markets, we also have a strong position in institutional business with our TB portfolio, which is the company's legacy business. I'm very proud that we are continuing to maintain a leadership position in this segment. On the API front, we have built substantial scale, and it's enabled us to really build very strong reliability of supply on the generic side of the business. Has been a critical piece of discussion in the US conversations very recently, where the US would like to bring API manufacturing in the US if possible. But we as an organization have more than 50% of our generic portfolio vertically integrated through our own APIs that enables us to really have a very strong cost position as well as reliability of supply that we've been able to leverage to ensure that we meet the market requirements on a consistent basis. We also have leveraged the API business and capabilities to build a CDMO business, as you saw. This past year, we have made significant progress there in terms of the teams and capabilities, and we'll continue to evolve our CDMO business based on this API capabilities to be able to build value with this vertical. So multiple growth drivers in the organization that give us the confidence of consistent growth going forward. So when I look at the journey over the last 5 years, many areas to highlight. On the commercial front, the turnaround of the US business was a material event for us over the last couple of years that enabled us to get back to consistent growth and more importantly, profitable growth for the organization, evolve our EBITDA margins on a consistent basis over the last 10 to 12 quarters. On the complex generic front, we were the first Indian company to launch a DPI in the US. We were very proud of, with Spiriva, to be able to get that approval in 2023 and launch it as a sole generic. We are still the only generic in the marketplace. It took us long, 5 years from filing to get FDA approval, but it's enabled us to build respiratory as a major vertical for our business in the US. When I look at our MDI and DPI business in the US, right now it's 1/3 of our US portfolio from a revenues perspective. So material contributor to our business in the US as well as globally, and also differentiates us as an organization. In India, we have expanded our position with 11 new divisions. Field force up from, it was 5,000, I think, 5 years ago, to 10,000 plus at this point. So significant expansion that has enabled us to grow above the market growth rate in the country. If you look at our chronic share in India, so this is, again, we're very proud of this accomplishment. 5 years ago, the picture looked very different. Our chronic share was sub 50%. Today, it's 64% chronic, so more sustainable, more profitable business. And when we compare ourselves with our peers, we are actually one of the best mix of chronic versus acute as an organization in India. We have continued to focus on commercial excellence through in areas that we felt needed dedicated focus, like the trade generics business that we recently spun out into a wholly owned subsidiary with the idea of really focusing hard on driving that business given the growth of the trade generics business in India. And Lupin manufacturing solutions, which again, as I mentioned in the previous slide on the API front, allows us to leverage our capabilities on the API R&D and manufacturing to build a CDMO business. We've also had strategic acquisitions over the last 5 years. Xopenex in the US enabled us to get into the brand side of the business. When Sunovion was looking to get out of the market, we thought it was a strategic opportunity for us to have a foot into the brand business on the respiratory front in particular. So, and the product has grown since we acquired with very limited promotion efforts. So we're looking at how we can build further on this start. Medisol in France, that enabled us to get into, we didn't have a presence in France until we acquired Medisol. Gave us a very nice injectables portfolio that enables us to build our internal pipeline on top of this to build our business in France. And Southern Cross in Australia that allowed us to almost double our business, has been a significant contributor to growth in the Australian market and has enabled us to get to that position of 4th largest generic in the Australian market. If you look at the material product launches over the last 5 years, Suprep from Somerset, Albuterol from India, Spiriva that I just mentioned, our first dry powder inhaler in the US, Mirabegron, material contributor in the last fiscal year, and continues to be this fiscal year as well. In India, we were very pleased to launch differentiated product like Difisma and Vilfuro, unique novel respiratory products that enable us to differentiate our product offering with the pulmonologists. In Europe, Luforbec has, which is a Foster genetic, has enabled us to really double our business in Europe. So significant contributor to growing our business in Europe that has done extremely well over the last 3 to 5 years. And Namuskla, our first orphan drug, our first brand in Europe, has grown very nicely over the last 5 years as well. We actually in the process of the second indication. We started with the NDM indication, which is a smaller. DM indication is much larger, and we're going through a phase 3 study at present for the DM indication in Europe as well as the US that will enable us to maximize this brand globally. And lastly, Etanercept, which has been a material contributor to our business in Europe, as well as other parts of the world, Japan, Southeast Asia, Latin America. We are very pleased with how things are evolving in the US and will determine how we commercialize this product in the US in the years ahead. 29 is when the patent goes off in the US. If you look at the impact on the financials, we've improved our gross margins from 64% 5 years ago to 69%. Look at our EBITDA margins, gone from 16% to 24%. We are a zero debt company at this point, have strong cash flows and have considerably improved our ROCE from the 10% level to 20%. So very pleased with the financial results of all of the efforts over the last many years. On the compliance front, we've made material strides, getting 3 of our sites, Pithampur, Goa, Somerset, out of warning letters to a VAI status. And I'm confident if the FDA was to visit the 2 pending sites, Mandideep as well as Tarapur, our sites are ready to receive them. But we don't have any pending products from the sites, so they don't have any hurry to come into and inspect these sites. But I'm confident in the near future we will get those sites cleared as well. The last couple of years, it's not been quiet. We've had multiple inspections across all of our different facilities, and we have sailed through each of them. So looking forward to continuing that strong trajectory going forward. You can see the impact of all of these efforts over the last 5 years. I just mentioned the financial results, but as you can see from the chart, the last 3 years has been a really strong trajectory for us and has also reflected in the shareholder value that has built over the last few years. So for fiscal year 25, you've already seen the numbers, so I'm not going to reiterate them. It's been a stellar year from a revenue growth standpoint, from a margin growth standpoint, a net income standpoint. But we are very pleased that all our markets, all our regions grew this past year. And majority of them grew double digit. If you look at India, grew at 14%. North America grew at 16%. US per se grew at 17%. EMEA grew 22%, so they have a stellar year in EMEA. APAC grew 5%. LATAM grew 10% after our Mexico facility came back up last year. It's now back to the pre-closure levels. So very pleased with the growth there as well. The rest of the world, along with our GIB business, the tuberculosis TB tender business grew 11%, and our API business grew 3%. So a stellar year for us as an organization. So I want to switch from there to a couple of the trends in our industry. As we are looking at the industry, certainly a lot happening in the US, but also multiple other trends that pose both challenges as well as opportunities for us as an organization. If I look at the geopolitical situation, a lot of things happening around the globe that really put India in a very strong position, in particular as countries and regions are de-risking from China. The US in particular is very focused on de-risking from China, and India, I think, is very well positioned to leverage that opportunity on multiple fronts. Tariffs are certainly going to shape the trade relationships between countries. The US is every day, every week in the news about tariffs on China, tariffs on other countries, tariffs on India. We are hopeful that, based on the bilateral trade negotiation between India and the US, the importance of Indian pharma sector in the US, given 50% of the prescriptions in the US come from India, that we are going to be able to convince the stakeholders to have either zero tariff or limited tariff on drugs from India. Certainly there has been a statement from the Trump administration on that front in the last couple of weeks that sounded promising, so fingers crossed on that front. There's a paradigm shift in the US healthcare industry with all of the changes the new administration has made, a number of areas that are impacted so far. Many healthcare programs have been impacted. A lot of research funding has been impacted in the US. DOJ has made material cuts across multiple areas. FDA has lost 20,000 people. Thankfully, the reviewers are still there. I mean, they cut a lot of the policy folks, but not the review branch that actively reviews and approves products. The Inflation Reduction Act, the government is actively reviewing the pill penalty on IRA. I mean, as a number of you might know, the IRA allowed HHS to negotiate drug pricing for biologics 13 years after the product is approved, while on small molecules, it's 9 years after product is approved, which was considered really a discrimination against small molecules, and that is under active review at this point. So we expect that it could land in the same place as biologics. You've heard in the last couple of days, MFN, the executive order from the Trump administration linking the pricing in the US to most favored nation pricing across developed markets in particular. We're going to see how this evolves. I think a lot of analysts are saying this is more bark than bite at this point. A number of big pharma companies have made commitments to invest in the US and very likely will renegotiate or backtrack those commitments if the government is going to peg pricing to overseas markets. We know that the US market actually funds for majority of the innovation in our industry. So really reducing pricing in the US is going to have a significant impact on the innovation front in the pharmaceutical industry. There's growing talk about onshoring manufacturing in the US. As I mentioned, this is likely going to be very closely linked with what the administration does on the MFN front, also very closely linked to what happens on tariffs, if there are material tariffs in place, and there's an economic incentive to manufacture locally that makes products more viable. Certainly that there'll be an opportunity to expand in the US, expand manufacturing in the US, that is. Switching to India, the pharma industry in India is poised to grow, double in the next 5 years. And this is not just in India, but also, exports from India outside of the country. So it's expectation of the revenues of the entire industry out of India is expected to double over the next 5 years. Fueled a good part by the growth in the middle class. That's expected to be 170 million people by 2030. And also very pleased that the government is now supporting Develop in India in the new R&D scheme, the research scheme, incentive scheme that the government has talked about putting in place. Just like the production linked scheme, PLI scheme, that has really benefited the industry in the last 5 years, we expect that this will certainly encourage more innovation in India and was much needed for the country. The India opportunity is pivoting from pharma alone to overall healthcare. We talked a little bit about this in our context, and patient-centric adjacencies like diagnostics, digital health, consumer health is gaining momentum. So the full solution for patients and physicians is gaining momentum in India. On the generic side of the business for the developed markets, there certainly is a move towards complex generics as well as specialty. We see multiple companies moving in that direction, both on the complex generic front as well as the 505(b)(2), as well as innovation front. We have an active, of course, on the complex generic front, we've executed in multiple areas, inhalation in particular. But also on the specialty 505(b)(2) front, we have active portfolio together, pipeline together of both transformative opportunities as well as incremental innovation that will help us differentiate our portfolio in countries like the US as well as other developed markets. We have seen over the last couple of years blockbuster drug classes emerge, like the GLP-1s, diabetes, obesity class that is set to grow to $100 billion over the next 5 years. So certainly a material opportunity that has emerged in the marketplace. And as some of these products go off patent, like semaglutide in particular goes off patent March of next year in a handful of countries, it will open the market for further expansion on this class of drugs. I'd say likewise, there's also an emergence on the biologics front. In India in particular, we are seeing emergence of biologics, in particular in areas like immunology and oncology, that is set to grow very nicely. Lastly, the rising impact of AI across industries and in pharma as well. On the brand side of the industry, there's certainly a very strong focus on drug development front through AI, delivering both efficiency as well as, from a timing as well as cost perspective. On the generic side of the business as well, there are multiple areas where we have potential gains here from an efficiency standpoint, from a commercial execution standpoint, from operations standpoint, from a cost optimization as well as quality perspective as well that our industry is going to leverage. So a lot going on across the globe in our industry. So that brings me to our strategic areas of focus as an organization. Looking at all of these trends, the areas that we have prioritized for our organization. Number one is to sustain our growth in our two major regions, India as well as the US. And based on the portfolio we have, based on the investments that we plan to make, we are confident of continuing to grow in both regions in the foreseeable future. Second is expanding our inhalation business. We have established a very strong position on the respiratory front. Today, if I look at our global turnover, 25% or so is on the respiratory side. We were always very strong in India, but over the last 5 years, we have built a significant presence in the US, Europe, and emerging in other parts of the world like Canada, Australia, on the respiratory front. So we continue to build on this pillar, as well as innovate. I mean, there is a material move, in particular in countries like Europe, to move towards green propellants on the metered dose inhalers. And we believe we are at the forefront with this. Our R&D teams, our manufacturing teams have looked at our evolution from a pipeline perspective on the green propellant side, both for India as well as product launches. Our focus in time, and that's how you've seen products like Mirabegron, products like Tolvaptan, products like Spiriva come to market in time, and there's a very strong focus in the organization to deliver on new product launches. Now, number 4 is business on the specialty front, on the pediatric side. And then over the years, we went into the women's health side of the business, which we had some success with, and got out when we saw challenges, when we went through 3-4 years ago, when we went through the downturn, we decided to get out of women's health, but are refocusing our efforts on building establishing injectables and biosimilars as a growth driver for the future. I mean, we have capabilities across both in R&D and manufacturing, as you know. And this year in particular, we're going to see a material inflection on the injectables front with products like glucagon, products like liraglutide, Risperdal Consta from Nanomi coming to market. And with the emerging biologics opportunities, with the FDA regulations easing up, as well as the private label business emerging in the US, we expect biosimilars to be a material growth driver going forward. Of course, as barriers reduce, the competition tends to increase. So we are very selective with our portfolio here, to ensure that we are either in the first wave or we are one of a few players that will enable us to get a solid return on our investment with biologics, as well as grow that business on a sustainable basis. 6th is establishing a novel product pipeline. I mentioned the 505(b)(2) pipeline that we are developing internally on our long-acting injectable platform, on our respiratory platform, some oral solids as well, that will help us build both our specialty business and in some cases also help us build a hospital business in the US in particular. Then building scale across other developed generic markets. So we believe that the platforms that we have in place and the pipeline that we have in place